Well, it's the end of another eventful year for the Wall Street. While the Nifty is marginally in the red for the year, India has managed to outperform most of its peers amidst the Ukraine war, soaring inflation and monetary tightening, royal sentiment across the world. A bunch of stocks delivered double-digit and even triple-digit returns. So we look back at the year that was and preview how the new year is likely to pan out. You're watching the CNBC-TV18 Editors Roundtable. This is the last Editors Roundtable of the Samvat. So welcome me and my editors as well as our guests on board. Gentlemen, to all of you, welcome. And I think collectively our guests joining us have what, over 60 years of collective experience in the market. Sunil and Madhu?
We are very young, so you know, we like to be that way.
Actually, it's the wrong question. Collectively between them, how much wealth have they generated? I think that is the right question. Not just for themselves, but for their investors.
Any of you want to answer that?
No, I think as Anuj said, the biggest satisfaction, and I think Madhubai will echo that, is, I think over the last so many years, so many retail investors have made, 10, 20, 50, 100, 200 times in only mutual funds. And I think that whole cult towards investing in equity and creating wealth, I think that is very heartening. Otherwise, only the foreign investors were making money. Yeah. I think now it is our domestic retail investors who have been creating wealth. And I think that is
actually, Madhu and Sunil together ran the fund. Mutual fund which delivered 100x. I mean, you hear about stocks giving 100x. Absolutely. I think Madhu and Sunil ran a fund which delivered 100x, which was super.
It was absolutely golden time, Manoj, and I must say that when we started, when I joined, the fund size was 6 crore. Maybe when Sunil joined, maybe fund size maybe 20 crores of these funds. So the fund sizes went up from 6 crore to 6,000 crores, and NAV went up by 100 times.
And I think, there are no two people in the stock market who, when you think about stock picking, actually, not macros or, longer term, but actual stock picking, ki paisa kis mein banega? I think, I don't think,
right here, sitting with us.
Madhu and Sunil symbolize
just a thought, when I started tracking markets, both of us were stars, we were making those big returns for shareholders. Will Sachin and, Saurav come back to bat again and manage money together? Yeah. Is that a thought?
So, I think we are together always by heart.
Absolutely.
See, it's not about managing money or stock picking. See, ultimately, when you invest, you are investing to make returns. You are not investing to allocate money.
Yeah.
So this whole concept of allocate 2% there, 5% there, 10% there is only, satisfying yourselves. And maybe some investors who like good stocks to be there in the portfolio. Ultimately, why are you investing? You are investing to create returns. So I think whether you do it individually in a fund structure, I think the genesis and the whole psychology behind it is to generate returns, right?
But Madhu, how are you feeling? This Diwali is so different, right? There's so much to be grateful for. I mean, we're out of a big Ukraine war, inflation, slower growth, and COVID. How is the sentiment right now as we head into the new Samvat?
So, Sonia, I think first of all, as you rightly said, we have so much to be grateful about. If you had asked me 1 year back that the foreigners will sell 3 lakh crore rupees of net stocks in the market, what will happen to the market? I would have betted my shirt and said market will be 13,000 Nifty, right? We are at 17,500. Yeah. India as a country, the most heartening thing is that, whenever we are now traveling, so it is not about only inquisitiveness. No, people are really feeling that they're in a way missing out something, right? And people really want to now put money in India, whether it is retail investor, the family offices, or even the foreigner. I had one of the most eventful trips, 2 trips. I went to Singapore and I went to London 15 days back. There is real serious inquiries now. Now, when will it turn into actual money putting, that we don't know. But thing about India is like a 6p stock neglected for many, many years, and suddenly because the stock has started to move up, suddenly there is a lot of interest to track it.
In fact, Sunil, it's almost as if we don't need FI money anymore. I mean, this has been just remarkable, right?
I think, to some extent, I think you are right that despite all this selling, in which Madhubai said, despite the $30 billion of selling, we have held on to it. I think that shows obviously the maturity of the investors in India, and it gives the economy a lot of more stability. See, India is a capital deficient country. We have a lot of things, but for us to grow at 7.5%, 8%, we need capital generation. which is to come only from foreign investors. So if you see the last 15-20 years of our economy, whenever the foreign inflows were very high, economy used to automatically go to 7.5%, 8%. I think this time with foreign investors being less, negative, despite that we are growing at 7% because the capital formation has happened internally. But if foreign investors were to come to India, and I'm very sure they will, I think this 6.5%, 7% can easily be 8%, which will ensure that we are by far the fastest growing economy in the world. So we need them. It's not that we don't need them.
I just add, it's not a question of whether you need or not. पानी तो उधर ही जाएगा जिधर ढलान होएगा बस, right? Money will only come where there is growth and when there are returns. Undoubtedly, even at 6.5%, 7% of GDP growth rate, we are distinctively
better than
ahead of any other country in the world. And mind you, this growth has come after a humongous cleanup which we have seen in the last 7 years, including banks, including economy, including bureaucracy. So because of we had a very low base, and from there we are starting to grow now. So
Absolutely.
who knows where this momentum will take us.
In fact, we were speaking with Nimesh Shah as well yesterday, and he said that after, traveling all over the world is a gloomy place right now, especially Europe, UK, and back home in India is where you feel the animal spirits. But we'll come back to that in a bit. Let's kickstart the show. First, Nigel's going to hop across to the wall to tell us how the year was and which were the big stocks that moved. Nigel.
Sonia, first it was a happy Diwali. And I'll say that in spite of the Nifty being more or less flattish in the last year or so, because, we had a lot of challenges actually. And yet, in fact, we managed to stand the test of time. So, a lot of things got thrown at us. Whether it was COVID, the post-COVID impact as well, particularly in China, whether it was the hawkish Fed, the Reserve Bank of India as well was hiking rates. The Russia-Ukraine war, that's what put pressure on inflation. Globally, you saw inflation prices that spiked up. Crude oil prices up by close to around 20%. All this in the, in the last year or so. And high inflation scenario, still, in fact, the Nifty managed to hold on. Well, supply side issues as well was another worry. And the FIs, as we were just discussing, well, they sold close to around $30 billion, and yet the Nifty didn't fall apart. That's telling you the kind of participation we had from the retail audience as well out here. And in the currency market, well, there was a relative outperformance out there because the rupee depreciated, yes, by around 10%, but the dollar index itself moved from around 95 all the way to around 114 or so. And if you compare India with the rest of the globe, the US markets were under pressure, the European markets as well were under pressure. They were down anything between 5 to around 20%. And even some of those, other Asian markets, they saw a lot of pressure, barring, the Latin market. The Brazilian index was a relative outperformer, and the Nifty as well was a close second, with being more or less flattish in the last 1 year or so. Within India, FMCG did very well, auto sector as well did very well, in the last 1 year. And the PSU banking names, they were something that did pretty well. IT did see some pressure points, and the small cap index as well was down. Let's run you through some of those big movers then on the Nifty itself. New entrant, you had, a couple of those names in there. But first, the losers. Some of those stocks from the IT pack, well, they were under pressure. You had Divi's Laboratory as well that was under pressure. And in fact, the commodity-related names, whether it was a BPCL in there, Tata Steel, Ultratech, all of them did see some selling. And HDFC Life, a distinct underperformer out there. But some big gainers, Adani Enterprises, well, it's made its way into the Nifty, and that's given you big returns. And just take a look at the screen. Some of those rare entities, Coal India, Power Grid, as well as NTPC, PSUs in there, that were relative outperformers. I don't remember the last time that happened. The Royal Enfield as well from the Auto Pack did pretty well. But there were some losers, and they are all up for you on the screen. Some of them seem to have lost their way. Godrej Properties, you had India Bulls Housing Finance, IEX, India Mart, some of these stocks, well, they ran away a goodish bit and then they came in for some profit taking. But let's wind this down with some of those big gainers. HAL out of nowhere, the defense play, TVS Motors as well continues to run ahead, and a couple of those PSU banking names in there as well, up and about in the last 1 year or so. But guys, it's still a happy Diwali because despite all the challenges that we had, the Nifty was still more or less flattish. Back to you guys.
Absolutely. I mean, happy Diwali. Despite the fact that the index did not do very well, but is the coming year going to be about? We've been talking about this passive style of investing, but I think will discerning stock picking come back into vogue in a big way once again? That is one, Madhu. And second, the purpose of the show is to slightly look ahead. But in the near term, in the next 1 year or so, for the first time in 10, 12 years, fixed income is starting to get very attractive, right? I mean, equities are poised interestingly, but fixed income is also looking very interesting points, both globally and here. How do you think about that in terms of asset allocation? Go on.
Sure. So, Prashant, I don't want to spoil the mood.
Yeah.
It's a happy Diwali. So I've been very clear that, let's not think that the Ram Rajya is here for India and everything is hanky-dory.
Yeah.
We should not ever believe that we are completely insulated from the world. And, regardless of what happens in the world, we as a country will continue to do well. It is very heartening to see some kind of a delinking which has happened, but I am sure what is happening in the world will impact us. If there is any big geopolitical event which happens, it will impact energy prices and subsequently it will impact us. So I think we will completely not be insulated from the world. To some extent, what is happening in the world will have an impact on us. That's point number one. Point number two, to your point, I don't think, at least for me, it has ever been about looking at index.
Both of you are absolutely equity people.
Yeah, it has never been like looking at index.
Yeah.
It has always been about stock picking.
Yeah.
I'm saying my experience is, even you got the best sector right, but if you did not choose the right company, even in the best sector, you would have actually ended up losing money or not making money.
It's happened in the financial.
Yeah, it is happening in the financial. You saw every year we see there are sector which does well, and there are companies which do exceptionally well, and there are companies which do badly.
Discuss about various individual sectors within the mid
No,
cap and small
I
cap.
just finished this point.
Sure.
So it will all be about stock picking. Coming to your point about fixed return. So last 2 years was huge tailwind for equities because virtually you were not making any money in fixed income. Real estate was not moving. Gold prices were down. So every other asset class in the last 2 years did not give any return virtually. If I look at bank rates are still 5.5% 1 year. Government is borrowing at 7.5%. So it's not possible that the banks will be able to borrow cheaper than the government for a very long period of time. So if interest rates really move up by bank deposit rates by 100, 150, 200 points, there is a possibility that it will happen. It will, to some extent, definitely that will become an asset class which will attract money. Having said that, all of it, Prashant, this $2 billion of SIP which we are getting every month and roughly $1.5 billion of pension fund money, I don't see a major risk to this inflow.
But Madhu, what I wanted to ask you was, you've been managing public money for the last 3 decades now. See, we saw the numbers. Nigel put out what somewhat to somewhat markets have done, Nifty has done, and everything. But in terms of sentiment, Madhu, because you talk to so many companies, you talk to so many investors as well, your investment group as well. Where you will put this current sentiment? Are we exuberant? Are we pessimistic?
Right now we are exuberant.
Exactly. That's
Right
what I
now
want
we
to
are
ask. Are we seeing an
exuberant.
exuberance in the
Anyone
market
you
now?
go talk, they are very positive. Companies are actually doing well. Numbers across sectors, barring few sectors. And the companies who have lost the race, forget that. But otherwise, there is a lot of exuberance. And also
Is that a worrying sign? Is that a worrying sign for you?
No, it is not a worrying sign because it is not happening on the back of any debt.
Sure.
So it is not people are borrowing thousands of crore rupees and being exuberant. Okay. It is happening in this exuberance. One best thing which has happened is deleveraging of corporate India. So so we should not take. I don't think it is a worrying sign, but we have to see that they don't commit mistake.
Sure.
At this point of time, when your cash flows are strong, this is the time when you really make a mistake. You go and do some unrelated acquisition, or you do some major capex, and if the cycle then slightly turns cautious or negative, that is the time equity returns really go down.
Okay, so the market is in an exuberant phase, but you're not too cautious at this point in time, right? That's the way to take it.
Yeah, so I'm not cautious. I'm just saying that let us be aware.
Let's be aware
in the
that
next
this is a
3-6
euphoric
months,
situation.
It is possible that market may tend towards global.
Yeah.
It is long term. We all know that oil is heading down. But what happens if oil goes up another $20 from here?
Yeah.
So you want to weigh in on this also because of the kind of bipolar nature that we have in this market. it's almost like been like cliche, but even within the sectors, it's clearly IT just keeps going down, banks keep going up. For how long can it continue?
So I think I partially echo what Madhu is saying, but I would not call it exuberance. That's a very, very strong word. I think market is discounting a lot of negatives. And it is still holding on, but it is not in a phase where, as Madhu said, no one is borrowing and investing. So to that extent, I would not say it's like in that bubble kind of zone. At the same time, at the same time, what you said now, that you're already starting to see now. Cycles are getting shorter.
Sunil, people are positive. They are not exuberant.
Yeah.
See, exuberance is when you do mindless things. People are not yet exuberant in that sense.
Okay,
I agree with you.
So the cycles are getting shorter. So if you see, defense, so 1 month only defense, then auto, only auto, now bank, so everything is only bank. So I think what is happening is the rotation is too fast. That means it's more trading kind of cycle which we are seeing rather than people taking a call from a 3-4 years perspective. No one is talking about defense from a 5 years perspective or auto from a 5 years perspective. And when you talk about auto, people say, yeah, Diwali ka sales bahut acha hai. Auto will do well for the next 3 months. So I think that is something which we need to keep in mind.
Okay, let's do one thing. Let's take a short commercial break. But when we come back, we'll also look at the mid and small cap winners and losers and try to get some lessons that you can learn and perhaps imbibe from this Samvat to next. Stay tuned.
Welcome back. You're watching Editors Roundtable, and we of course have two doyens of financial markets with us, Madhu Kela and Sunil Singhania. Before we ask more questions, let's go across to Nimesh, who's standing by the big wall, and he's looking at some big mid-cap movers and shakers for the year, both in terms of themes and individual stocks. Nimesh, what do you have?
Anuj, the reason I've picked up the mid-cap and small-cap is largely because both our guests, Madhu and Sunil, have been champions in identifying the right winners and exiting the losers as well in time. So that's why I've looked at the mid-cap and small-cap somewhat to somewhat. Let's first look at the NSE mid-cap index. The index is down just 1.5%, but within that, there are lots of winners and losers to identify. So look at the winners list first. In the likes of Sri Renuka Sugar, Raymond's, Shoppers Stop, Karur Vysya Bank, KPIT, Mazgaon Dock, so many of these stocks are up between 130% to 64%. So that's the largely a mid-cap winners list. Look at the losers list within the mid-caps as well. Something like a Lux Indices is down 57%, Manappuram Finance is down 51%, Metropolis is down 49%, the likes of Sterlite Technology down 41%, IX is down 43%, and the likes of Jubilant Pharmova, even that stock is down almost 50% in the mid-cap space. Now look at the small-cap index. The Nifty small-cap index is down 12.5%. But if you look at the winners list, that will show a big surprise. Look at the winners list now. Mirza International is up almost 3x, almost 4x. KPI Green Energy is up 3.5x. The likes of NDTV, specialty restaurants, even like a GMDC is up almost 95% in the last 1 year, and someone like even HBL Power is up 120%. So that's a big list of winners as well. Now look at the losers in the small cap universe. Dhani Services is down 75%. Solar Active is down almost 68%. Dilip Buildcon is down 65%. Likes of Strides Pharma is down 44%. Indiabull Real Estate is down 51%. Somewhat to somewhat in this Diwali. So that's the mid cap and the small cap list for you. I've also looked at the IPOs of this year. If you look at the IPOs, even there is a big divergence. The likes of Adani Wilmar is up 161%. Veranda Learning is up 112%. Venus Pipes is up almost 100%. Go Fashion is up almost 100%. And Data Pattern is up 80%, in the last 1 year. But there have been big losers as well. And the losers are largely coming from the platform businesses. Look at, Paytm. That's down 70% from the listing price. Fino Payments Bank is down 65%. PB Fintech down 60%. AGS Transact is down almost 50%. And MedPlus is down another 47%. So the big learning is, even in the mid-cap and small cap, you have to identify and back the right winners, is what Madhu and Sunil do every now and then. And that's why I put out that list. Now, Anuj, you should ask them as to how you should identify the winners in the mid-cap and small cap.
Oh, absolutely, Nimesh. Thanks a lot for that. That's a very exhaustive list that Nimesh put out. Of course, you both have had some stocks in that. We'll not go there. But Madhu, one interesting thing which he put out was the new age companies and all the listed stocks from there. They have actually seen quite a bit of wealth erosion. Whether it was Paytm, Zomato, of course, was not there, but that's also eroded quite a bit of wealth after a good listing. PB, car trade, which is supposed to be some really good businesses. What's happening here?
At least once I can say that we said it so. At least, we've been I think both have been very, very vocal. That, it's not about a good company or a good business. Finally, in the stock market, it's about valuation. Right? What value you are paying for any business and the valuation at which they are coming. कुछ लोग यहाँ देखते हैं, कुछ लोग यहाँ देखते हैं, कुछ लोग वहाँ देखते हैं. तो ये इनके इन्वेस्टर वहाँ देख रहे थे. So obviously, clearly we have seen that it doesn't really work. It doesn't work only in India, but what has happened in Nasdaq is even more horrifying than this. A lot of companies, very, very good companies, even companies like Netflix were down 85% from the peak. Companies like Zoom Telecom, which was absolutely one of the darling at one point of time, was down 80% from the peak. So I think these valuations, Anuj, in my opinion, had to crack.
Okay.
Now the moot point is it the bottom or are there real opportunities here? I think, a lot of these companies are going in their lockup period. A lot of the stocks were being locked up. Some companies got listed 6 months back. Now the rule is being relaxed that they will be tradable after 6 months. Some were listed 1 year back. So you will see in the month of November, roughly $15 billion kind of potential free float will get created. Now going by what we saw in Zomato, right? Because when the stock went down from 160 rupees to 60 rupees, even the people who wanted to sell, they sold up to 40 rupees.
Yes.
Yeah.
Right? And there was a huge volume and delivery happened in that period. So I am taking a bet that a lot of these companies, will come up for selling in the month of November. And a lot of these businesses are very, very good businesses. So I would be waiting and watching very carefully that if something really comes in
To
our
pounce,
horizon,
basically.
absolutely,
Yeah.
in our horizon.
Sunil,
Just to take Anuj's point forward, especially to you, Sunil, I spoke about how the platform companies got corrected 70-80%. But even then, within the platform businesses, you've identified two winners which are part of your portfolio as well, Saregama and Route Mobile. So, tell us, as a fund manager, how do you differentiate between not to buy into Zomato and PB Fintech and go for traditional businesses where the valuations were supportive?
So I think whether it's a new age business or an old age business, the style of investing has to be old age.
Okay.
And invest in companies which make profit, where there is visible profit growth, and what you pay today will be more than made up by way of future profitability. I think if you follow that to the T, whether it's a new age business or an old age business, I think eventually you'll end up making money. So a lot of these businesses which have not done well, frankly, hats off to the entrepreneurs. They've created fabulous businesses. They've made our life easy. I think we all can't live without Zomato and the Swiggies of the world. We can't live without the Amazons and the Flipkarts of the world. But, the price what we were paying was discounted and profitability which was not even visible maybe 10, 15 years ahead. So I think that category of investors is very different. I don't think we are of that category of investors who will buy just because it is looking better and just because someone else will come and buy it higher than you.
And just because it is fashionable to invest.
In fact, what is fashionable is most of the time never makes money. So I think you just have to look at the inherent, company. And more importantly, Nimesh, you have to look at companies which will not require further capital to survive. A lot of these companies need further capital to survive. And in an environment, where private equity just dried up, if they don't get capital, I think they will have to lay off people and they will close down.
Right. Yeah. I think that's a big learning for the investor, that look for companies where they don't need too much of incremental capital to grow, and that's
not to grow, to survive.
To survive.
To grow is fine.
Right.
If you don't get capital, you won't grow. Right. They need capital to survive.
Correct.
So what do you do at a time when, there's not only a need for capital, there's a lot of cash burn, there's also so much competition coming through, right? For Nykaa, for example, or even the PB Fintechs of the world. Do you stay away completely or do you still look for some value here?
You see, competition is a way of life. There will be nothing where there will be no competition, because human beings are human beings, entrepreneurs are entrepreneurs. If some industry makes disproportionate profit, there will be 100 others who will come in. We had one company called Jindal Steel and Power. They made 4,000 crore profit in one power plant. And I think India benefited because of that. There was 1 lakh crore of new power plant which was set up. So India benefited out of it. So I think competition will always be there. What you have to see is, what is the capability of the company and what is the strength of the company to withstand this competition. I think that is what is very, very necessary. But most important thing is, if you need capital to survive, then it's a no-go.
Okay, you know what? We're going to take a short commercial break, but on the other side, we will tell you about some lessons on how to invest right and stay invested, and more importantly, how to identify some new winners from this Samvat to next. Stay tuned.
Welcome back. You're with us here on the Samvat Special Editors Roundtable, and of course, we have been graced by Madhu Kela and Sunil Singhania, who've been talking to. What we'll do in this segment is basically talk about three names. We'll talk about Divi's Laboratories, JSPL, and Bajaj Finance, and ask them how they identified these businesses and what are the learnings they had, while holding them. How did they decide to sell, and any regrets whatsoever. So that's a disclaimer. This is purely for educational purposes, and this should not be construed as an investment advice. So having said that completely and clearly, Madhu,
Absolutely.
Divi's Laboratories, let's start there. And start with that extremely interesting story of how you met the management for the first
Have you
time.
made an effort to meet that management?
Yeah. So, in those days, it was not very easy. So, I literally had to travel in a flight, get a ticket next to him, and show him that I have no business going to London. I have just come to meet you. Dr. Divi's, right? And then, of course, we had a great conversation about his passion, etc. And that was a really deciding
What
factor.
year was this?
This was 2003-04.
Okay.
Very
What was
early
the
in
market
our
cap
life.
then? Of Divi's?
Market cap was 140 crores
140 crores.
at the listing price.
Okay.
So Nimesh, we are all talking about learning, and we'll talk very freely. Diwali hai. See, one of the most important learning which I have about mid-cap and small cap company, there are real multi-bagger and there are transitory multi-baggers. A lot of time we confuse between the two, right? Even the transitory multi-baggers, they go up 2, 3, 4x, 5x, we start to believe that this is going to last forever. And sometimes the real multi-bagger look like a transitory multi-bagger and we end up selling them. So let me just tell you, you think I'm smart, I think I'm not. Because if I was smart, if I'd put only 10 crore rupees of my personal money in Divi's, only 10 crores, and just left it, and whatever dividend which I got, I would have invested in Divi's only, nothing doing. My money would have been 1800 times.
Wow.
How much? 1800 times.
So 18,000
So
crores.
that 10 crores would have become 18,000 crores.
And to think of
So
it, Madhu,
all 20 years I've worked, I've actually eroded wealth.
that was a fascinating story.
It is a frank admission.
No,
Right?
Madhu, the reason I say that is because it was an OFS. It was not even an IPO.
Yeah.
I had done that off the charts, and I had spoken to you about
PE,
it.
I think Kotak
And
was selling
it was the OFS investor had made 4x or 5x.
That's right.
You think 4x or 5x is good, but after that you've missed out on the next 1,000
They
times.
actually made 14x because they bought the share at 10 rupees. They sold it at 140
40,
rupees.
yes.
And then we bought it at 200 rupees in the fund. So again, just look at it. The fund bought it. We both have left. You look at the portfolio of Nippon Fund, they are still holding Divi's.
Yeah. Correct.
And that is the benefit of long-term investing and a portfolio construction.
So, there's an important lesson here, right? You know when to buy sometimes, but you don't understand when to sell. So,
Sonia, the
Sunil,
important
what is
lesson
the...
is when you just want to finish.
Sure.
The important lesson is when you really find a great company. That time you have to just ignore the noise from the market. You have to ignore. Divi's would have fallen more than 50%.
Absolutely.
Maybe 10 times in this journey between 2004 and 2022, 23.
Just
Even
2 years
again it
back.
has fallen
Just 2 years back.
5,500 to
Yes.
3,500,
In
3,500.
2016 it halved.
So my friend, philosopher and guide Rakesh Bhaiya used to tell, it is so difficult to hold your conviction when the stock falls 50%. And that is what made the difference. He had the conviction to hold Titan. When the stock fell more than 50% so many times in his journey. So what the real lesson is, these are very few opportunities. B, you have to have all the conviction before you invest. C, you should be able to monitor that company well. And D, and the most important, you should have the stomach to digest the volatility.
And E, do whatever it takes to meet management.
That's the big
Madhu,
learning, right?
I also believe that, you used to also book a hotel, the same hotel where the US FDA officials were traveling. So that, if there's some inspection going on, you can find out, what's happening.
It was not inspection. So, this management was extremely tight-lipped. And they will never ever utter one single word about, who their clients are, this, that. So, obviously, we were also analysts, we will not give up. So, we will go to the hotel where their clients were staying and we'll find out.
But that's the other big difference, right? Now we take data because it's everywhere, it's easily accessible. But this is a time when, it was hard to come by.
You could have been in a secret service in another time, another life.
Today also, Sunil and me would do the same.
Yeah.
We will talk about what we are doing today, maybe 20 years later. But today also, if there is a great idea, we will not leave it like this. And hopefully now, if we get a really great idea, hopefully we can hold it for 10, 20 years.
All right. So that's about Divi's. And Madhu, if I remember correctly, you took that flight and the next flight you took and came back as well.
Yes,
you had no
absolutely.
business going to London.
Nothing.
It was just to
Absolutely.
meet the management.
Absolutely.
All right.
Yeah.
But Sunil, before we went into the break, the earlier break, you mentioned briefly about JSPL. In the last few years, it's taught investors or traders a lesson that they'll never forget at times, because the management, we have a bit of an issue with selling various assets as well. But you all got in when it was a very, very, niche market, very small. It made its way into the Nifty, and it grew big time as well.
I think Madhu touched upon that. There are some multi-baggers which are transitionary and some which are, perpetual. I think by the very nature, these businesses, which is steel and to some extent power, they tend to be cyclicals.
Yeah.
So I think I remember when we bought JSPL, it was actually not a company which got listed or which was set up. It hived off from another Jindal Group company as a hive off, and the small company was handed over to Naveen Jindal. And I remember first time when I met, he was cleaning his gun. So, I said, promoter banduk leke baitha hai. And then, he was a very sportsman. And I think people used to get a little bit hassled because of their huge expansion and capex program. Even now when you see, a lot of investors say that bahut capex kar raha hai, we don't want to invest. But if everyone starts to think like that, then the country is not going to grow. So I think that was a company which believed that having in-house resources made sense. And in those times, iron ore was like sand. You could buy it for free, only transport cost. But still that company had the foresight of having their own iron ore blocks, their own coal blocks. They were the first company to set up a merchant power plant. It was a new thing. No one is to set up a power plant without having a PPA. They took the risk of setting up a merchant power plant. And I think it all worked out.
Yeah.
But obviously these businesses are transitionary. And then India went through that, in between issues about taking back the mines and all. So it was a mix of a few things which led to this whole sector facing a lot of issues. But I think we
But you were lucky to exit on time.
We made a lot of money.
Let me just add 2 points. We actually bought JSPL at 300 crore market cap. And we must have sold our last shares maybe at 40,000 crore market cap.
Wow.
Then it went to 90,000 crore market cap. 85 or 90,000 crore market cap in a matter of maybe 6 or 12 months. And 15 years later, that company was available for again 4,500 crore market cap. So see, for a lot of your viewers who are seeing that, is the India story done? So this is what the stock market story is, and this is what the India story is, that you could buy something for 300 crore market cap, you could see 80,000 crores, and then 80,000 coming back to 4,500 crore, and again back to 45,000 crore.
Okay.
All over again.
That's on.
I don't want to ask about Bajaj Finance because, we were talking about this in the break as to how you regret selling early, right? Why did you sell? I mean, all the boxes were ticked for Bajaj Finance. I mean, great pedigree, strong company.
I'll give you a little bit about Bajaj Finance. So, this was just after Lehman. I think Bajaj Finance was a business which was there. I think even the promoters had forgotten that there is this company called Bajaj Finance in their stable. It used to be just an in-house two-wheeler financing company. And those days, the resale value of Bajaj scooters used to be very less. So their NPAs used to be 30-40%. Because if you did not repay, you were saddled with a scooter which would sell at maybe 30-40% of the price. But you know, it was very cheap. It was cleaning up. We bought it at like 0.3, 0.4 time book. And post Lehman, to make any kind of money was like, you know, Diwali, as we say. And it very quickly went up like 4-5x. And that point of time, you know, we thought that one-time book, 1.5-time book is all it could get. We never expected the company to grow at 40% CAGR for another 15 years. And the book going from 1.5 to 8 times. So I think, as you rightly said, you know, it's not only about buying, but it is sometimes also about holding stocks. But you know, all this is in hindsight. In some companies like Jindal Steel and Power we sold, it worked. It is possible that if nothing of that sort would have happened, maybe this company would have been much larger. In some companies it did not work. In fact, even in Eicher Motors, we were very early to buy and very early to sell.
You know, I have a question to both of you. Why could we not have a second Bajaj Finance? I mean, if, you know, what is it that Bajaj Finance did so differently and is still doing so differently? And when it's you know, when everyone can see that, you know, something like this can generate so much ROE and can be given 8 times price to book, why has we not been able to get a second?
No, we have a few which we feel will be the next Bajaj Finance, but we'll know after 10 years.
You're free to tell us.
I would say that, you know, great companies, Anuj, are actually very few. That, you know, great companies are not only about external opportunities. If it was only about external opportunity, then many people actually will create great companies. It's also about leadership, also about risk management. It's also about not doing wrong. So just to digress, we're talking about, see, I was just thinking about, reading about Warren Buffett's success. Actually, if you see, there are only 2 distinct characteristics which I could come up. One is the longevity. That for how many years he has been at this game. That's why the success looks abnormally high. Because if you do it for 70 years and keep compounding, and the biggest thing is that he did not commit a disaster. Let me say he committed many a mistake, but he did not commit a disaster. So companies like Bajaj Finance, you know, they have stayed for a very long period of time, and hopefully the way market is thinking about them, they will stay for a very long period of time. But if you look at last 15 years also, Bajaj Finance may not have committed a disaster. Versus that, if you talk about a lot of NBFC companies, you can clearly pinpoint that this is a disaster, this is a big mistake which was committed.
Okay, well, lots of pearls of wisdom here, but we need to take a quick commercial break. We'll come back and take a look at India's growth roadmap and all that you can watch out for. Stay tuned. Well, it's been an absolute pleasure to host both Madhu Kela and Sunil Singhania here in our studio for the last Samvat trading session as well as Editors Roundtable. Let's try and summarize it. Sunil, for all the viewers looking at you right now, watching us right now, what's your advice this Diwali?
So one thing I'm very happy that none of you asked me what the concerns in the market are. So for a change, we are only talking positive. See, I think if you look at India over the last 20 years, so many things have happened, including the last 1 year. And despite that, a lot of wealth has been created. I think there is no doubt that we are in that hockey stick curve, where from this 3 trillion, it is going to be 6 or 9 trillion. So I think the wealth which we have created over the last 70, 75 years, it's going to be created in the next 7 years. And I think that is a kind of opportunity we have. And we have all discussed our mistakes and our winners and all. I think one common trait which is coming out that if you are convinced, if you are positive, then equity is the place to be.
Okay.
But the challenge is you have to be one, positive. You can't be talking about negative and investing in equity. Second, you have to give some time. And third, you have to let your conviction play. Okay. So, to all the viewers, I think India is a great country. We are all lucky to be in India and investors. A lot of wealth is going to be created.
But this is what Rakesh used to say, right? You have to be bullish on India if you have to make money in stocks, right?
And we have all learned that after a very, very long period of time, that you have to inherently, if you are bullish, if you have conviction, then eventually you make a lot of wealth. You have to have the stomach to digest the volatility.
Okay, but guys, enough of all this market talk, right? Let's get this party started a little bit. It's Diwali, it's time for celebration. And there's one person who's an absolute party starter from our team, and he's Mangalam Maloo. So he's joining in right now, Mangalam, and I've heard that you are a great singer, Madhu.
I'm not a great singer, but I
heard the word party, so I know. I know that you're a Mukesh fan.
I like Mukesh.
So, keeping the gains limited, keeping the happiness limited, what Pal Do Pal, is that what you were saying? You want to sing that?
Yeah, we can sing that.
Please.
Yeah, please. Why, you are going to sing? Or
No, you're the one who's
मैं पल दो पल का शायर हूँ, पल दो पल मेरी कहानी है, पल दो पल मेरी हस्ती है, पल दो पल मेरी जवानी है। मैं पल दो पल का शायर हूँ।
But then it's a happy occasion, so we got to sing Zindagi.
एक सफर है सुहाना, यहाँ कल क्या हो किसने जाना, जिंदगी एक सफर है सुहाना, यहाँ कल क्या हो किसने जाना।
And what about
Mangalam, Sunil's inner singers also come out. He was humming it. He was.
I can't sing at all.
Yeah, but you can.
I can join you.
Okay, take the lead.
Yeah.
Take the lead.
I don't know.
You take the lead.
You sing
I
that.
was thinking of मैं जिंदगी का साथ
निभाता चला गया, हर फिक्र को धुएं में उड़ाता चला गया।
Anuj, you want to sing? You I know have a musical board inside you, and this is Diwali. You can't say
Continue this.
You will not be rated for this. Trust me.
जो मिल गया उसी को मुकद्दर समझ लिया, मुकद्दर समझ लिया, मुकद्दर समझ लिया, जो रह गया मैं उसको भुलाता चला गया.
Such a positive song.
So, when he said har fikr ko dhuए में उड़ाता, I'm sure he spoke about market fikr because he has no fikr about the market at the moment.
about the ITC.
Thank you.
Thank you so much.
I'll take you to
What about
party
you,
after this.
Mangalam? Why don't you sing that?
Mangalam, you should conclude. Give us a nice one.
Actually, maybe Sonal should have joined. Actually, Sonal and Mangalam,
Sonal's a great singer. Yeah, she's a better singer, right?
Let's wind this down, Mangalam, with an.
Let's wind this down. Whatever song.
Why don't you sing?
You just take it and we'll chorus.
You guys have put me on a spot now. Something to do with India, maybe. Or the stock markets for next year. We can do Hum Honge Kamyab.
हम होंगे कामयाब,
हम होंगे कामयाब एक दिन ओ मन में है विश्वास पूरा है विश्वास हम होंगे कामयाब एक दिन
We're talking about take this. These gentlemen have been doing this for the last 30 years now. Every year they've been outperforming the markets.
Nimesh Shah,
and
आपको
been very
बोला, why are you giving our age away?
Okay, I have to ask you both. I'm sure you get asked this a lot, but what is it that keeps you going? 30 years is a long time to do the same thing over and over again. So, Sunil, first to you.
I don't think we do the same thing again and again. I think that is the beauty about equity markets. So see, first of all, you are doing every day is a very different day. Second is you look at our profession, it's like such a fantastic profession. We get to meet the smartest of smartest people, the largest of largest entrepreneur. I don't think apart from media, there is no other profession who can do that. And third thing, I think it's so interesting, because the kick of going right is so pleasurable, and it's not about money. I'm very sure that it's not about money only. It is a little bit about money, but I think that is the biggest.
If you follow your passion, the money comes anyway, right? Is what you're trying to say.
That is true for all professions,
Yeah.
but I think this is a little different in the sense that every day is a new challenging
new
day. At the
challenge.
same time,
You
it's
know,
an
you know what
interesting
Warren
day.
Buffett said, that money is not that important, but make sure you have enough before you say something like that. So I think that's what Sunil means, right?
And Madhu, what about you?
See, for me, I'm very, very fortunate that, all my hobby, passion, interest, everything is folded into one. And that is markets. I can't imagine my life without markets, without investing. Second, I will make a very profound statement, and I know I'm speaking in front of TV. If God gave me another birth and told me what you want, I would say exactly the same thing.
Wow.
Not a thing less, not a thing more. Trust me, I truly enjoying markets, truly enjoying learning. And this is like, as you spend more time, you really get better and better if you are really passionate about it. And I think hopefully the best years are ahead of us, not behind us.
Absolutely, and that is
We are all blessed with good friends, so we learn from each other. It's very, very few professions you have that kind of camaraderie where you are learning from each other. I think that also is very important.
absolutely. And I mean, that is a true definition of a successful life, right? That if you get a chance to do it again, all over again, you'll do the exact same thing.
Exactly
Madhu and Sunil.
Maybe less mistakes.
But that's how you learn, I guess. It was a pleasure hosting you guys. One of the best shows that at least I've hosted. Thank you so much, and happy Diwali to all our viewers from the entire team at CNBC TV18. Hope this is the best one yet.
And thank you for having us. Thank you so much.
Happy Diwali.
This festival, bring in Nissan.